There is one chart in crypto that everyone should be talking about and everyone should be watching, but I don't think we are watching that chart. And this chart determines whether or not we're going to continue this bull run in crypto, or whether we can expect some rough and turbulent tiles ahead. In fact, let me show you this chart. That's the chart we're looking at. And for as long as this chart keeps going up, we could have a rough time in crypto. Today, we're going to look at what this chart actually is and why it's so important that we look at this chart being in crypto. I'm Crypto Man Run, and I come to you every single day at 10 a.m. EST, and together we are building the most profitable, loyal, amazing crypto community around the world. In fact, our channel is exploding. Welcome to all our new viewers on Twitch. We are growing our distribution every single day and having a lot of fun doing it, bringing you crypto love and crypto wisdom. You know what else we bought you? We bought you our token of the month for February. Remember our token of the month for February? That was, of course, none other than Cardano. Fred, how did we do in February?
Go champ, show me what you got. You a champ,
That is how our token of the month performed for February. And Fred, in fact, Fred, call up the chart and let's look at what Cardano did in February. Remember, guys, we called this one for you guys at 30 cents on the 1st of February. We said that big things were going to happen on Cardano in the month of February. Cardano finished the month of February at between 120 and 130, depending on which exchange you looked at. So huge, great performance for the month of February for Cardano. And no pressure on us to pick another token for the month of March that will actually perform the same. Well, if you want our token for the month of March, you're going to have to tune in tomorrow, because that's when we're going to announce our token for the month of March. Guys, we've done a lot of work to get you. All we need from you guys is to smash that like and smash that subscribe so we break this algorithm and so more people learn about our show. That's all we need from you guys. We've got a huge jam-packed show for you guys today. So much happening. We're going to be looking at the numbers around Cardano. We're going to be looking at the fundamentals. In fact, Fred, call up those fundamentals. Let's look at the fundamentals behind Cardano. Let's look at the numbers driving this network. Is this only pumpermentals, or are there actually fundamentals to driving Cardano? And if you look at these numbers, they actually tell a story. So let's look at the transaction volume of Bitcoin versus Ethereum versus Cardano for the last 24 hours. You look at Bitcoin. Bitcoin did $27 billion worth of volume. You look at Ethereum. Ethereum did $13 billion worth of volume. And Cardano did a staggering $19 billion worth of volume. Guys, that's huge. You're talking about Cardano actually getting the network effect here. And remember, we spoke about the network effect. And the network effect really is how many people are joining this network. So it's all about how many users are joining the network, because each user adds more value to the network. That's Metcalfe's law. And if we look at those Cardano numbers again, the number of active addresses on this network, active in the last 24 hours, was 122,000, or 1/5 of Bitcoin's active addresses. Now here you're talking about a protocol that doesn't have any dApps built in it, doesn't have any smart contracts built in it, because they haven't got the smart contract capability. So you can see that this protocol is about to explode, and we're super proud that this was our choice for the token of the month in February. More importantly, let's look at the transaction fees when we compare Bitcoin, Ethereum, and Cardano. So the average Bitcoin transaction fee was $15. Not bad. Bitcoin's come a long way. I guess the mempool is quite empty. You look at Ethereum, the average transaction is effectively unusable. You're talking about $55 per transaction, which to me actually makes Ethereum unusable at the moment. And that's why people are looking for another alternative. You look at the transaction fee for Cardano, 0.12 ADA, which translates to about 15 cents per transaction. And if we look at the number of transactions, we can see that the whales have been active when it came to Cardano. The whales have been the ones doing the transactions, because the average transaction was super high. So all in all, a great month for Cardano. They are expecting a lot in the next couple of months and weeks. We know that their smart contract upgrade is coming soon. We also know that their bridge between ADA tokens and ETH tokens or ERC20 tokens is also going to be set up soon. And they did talk about Cardano coming to one major exchange. They did talk about a major liquidity event, which may happen for Cardano holders sometime in February. We didn't get an announcement in February, so I suspect that may be coming sometime in March. WinstonWolf also called this one on our show, and if you remember what else Winston called on the show on Friday, he called Public Mint as his new launch, and we teased WinstonWolf about whether or not he would get 100x on his Public Mint launch. Well, he got very close to that. I think he got a 40 or a 50x on Public Mint, and today we have the team from Public Mint. We have George Pereira from Public Mint to tell us what this protocol actually does, and they're going to be joining us live. And then in other news, well, if you sold the dip, if you sold this weekend, we told you many times, don't sell this dip. This is a healthy dip in a correction. In fact, Fred, call up the charts of 2017 versus 2021 so we can see where we are. When I look at this is for me the best indication of where we are at relative to 2017 versus 2021. And you can see that history is repeating itself. History repeats itself and it rhymes. In this case, it's absolutely repeating itself. And we've had this healthy correction. And if you look at the corrections, Fred, call up that slide again. You can see that the corrections are exactly the same. The size of the wick on the candle, on the red candle, is exactly the same. And the good news is that after we have this correction, we typically tend to go up over 100%. And today, to talk about the graphs and the charts, I've got Burb with me, and we love Burb. And he was here last week when this mess all started, and he's going to tell us whether he thinks that this mess is over. And moving on, we also know that the miners have stopped selling. So if you believe the theory that the miners were selling to manipulate the price and to manipulate the futures last week, well, after the futures close, for the first time in a long time, we can see that the miners' net position is actually positive. The miners' net position refers to the number of coins the miners are mining versus those that they're selling. And when the miners' net position turns positive, it shows that the miners are actually becoming bullish again or actually holding on to Bitcoin again. And we haven't seen this indicator since around the middle of December. So since the middle of December, the miners have been selling into the strength. And it looks like now for the first time, we've seen the first green candle, which translates to the miners actually looking like they are being positive. So the miners have stopped selling the dip. And if you sold the dip this weekend, you know who you sold to? You sold to Michael Saylor again. He just tweeted that MicroStrategy again bought 328 Bitcoins for $15 million in cash. And that makes the average price 45,710. This is the first time I've seen Michael Saylor actually buying the dip. Because usually this guy just goes in and starts buying at market. If you sold the dip this weekend, you sold to him. And not only did you sell to him, but you also sold to this guy. No, not to, you sold to these guys, but you also sold to Kevin O'Leary. Kevin O'Leary, Mr. Wonderful. He has now come around. Fred, play the video of Mr. Wonderful and his attitude on Bitcoin.
Every time I talk to you about this, it's the same topic I look at the asset value of Bitcoin versus the asset value of all things traded. And Bitcoin is still a nothing burger, a giant nothing burger. And the reason I would argue that that's the case is you don't have every institution willing to play ball with it.
All right, a giant nothing burger, but the same guy that called this a giant nothing burger made an announcement today that while he was talking like this on CNBC and other channels, while he was doing this, he also put 3% of his portfolio into Bitcoin and Ethereum. While he was talking like this on public TV and telling us that we're all crazy and Bitcoin is nothing burger, he was out there buying Bitcoin. Crazy, right? But another one has come to our corner, and you know what, we'll just take him in as one of our own because we need people like that because he's got a lot of airtime. And this is the kind of person who will go and talk about his position to all of his friends and all the other big investors. And of course, with all the media airtime that he gets on CNBC, we couldn't have wished for a better person to actually have changed his mind. And speaking of changing minds, well, remember Citibank. Citibank came out a while ago and they were absolutely anti-Bitcoin. And today, they too have come around. And they said that Bitcoin could become the currency of choice for international trade. Now, the idea of an international trade currency is long overdue, but up until now, there have been problems doing an international trade currency because it's always one country that controls the international currency. And this has been a big hurdle because, if it's the US dollar, then people are worried about what the US will do to its currency. If it's the Chinese yuan, then people are looking at the Chinese yuan and thinking, well, what are the Chinese going to do? But now you've got an algorithmic currency, or potentially an algorithmic currency, which may be used for international trade. And it makes so much more sense to use Bitcoin, this international currency that no country's economy has any bearing on. And that's exactly what Citibank came out and said. That they said that they think that this is the future of Bitcoin. But if that happens, obviously the regulation has to change. And why does the regulation have to change? Because today, Bitcoin is not regulated as a currency. It's regulated as property or an asset. And that means that every time we use it, we have to pay a capital gains tax. And for as long as that happens, no importer is going to use Bitcoin to buy anything because every time they move it, they're going to have to pay tax on the difference between what they bought it at and what it's trading at today. So that's not going to happen until the international laws change around Bitcoin and until all the banks start to accept Bitcoin, which is starting to happen pretty quickly. Except my bank, can you believe it? My bank doesn't allow for any crypto-related transactions. I know I told them last week that I'm going to close my account. In fact, I am closing my account, and I am going to move to a bank that actually does allow for crypto transactions. So that is what needs to happen if we're going to make an international trade currency out of Bitcoin. But the good thing is that Citibank is now well in our camp. So we've got a big show for you guys today. I want to talk to you guys a lot about the chart that everyone should be talking about, but aren't. And before I do that, I'm going to bring in Crypto Bird because I want to know if this mess is finished. I want to know if this mess is over. Bird, I watched you on the weekend and you were talking about buying the dip. Did you actually buy the dip?
Yes, I did.
Okay, so does that mean that the pain is finished? Does that mean that it's all going away now?
The pain from the choppy market, I don't think so. We're going to see a bit more chop, but I think, for now, the dip is, the bottom is in for now, definitely.
What tells you that from a technical point of view? I know that you're looking at charts. I love your charts. I think your charts are one of the best. So let's look at them.
Appreciate it. Yes,
guys, while we are waiting for Burb, we need your love. We need your support. You guys all tell me to stop begging you for likes, but YouTube has been banning my videos. Friday was the first video that we didn't ban. So all I need you guys to do is smash that like button. I see that there's 2,000 of you watching the show and only 500 likes. I'm going to do my bit. You guys do your bit. Smash, and let Burb walk us through his charts to tell us why he thinks that this correction may already be finished or we've seen the end or the worst of this correction. Burb, I'm going to share your screen, and that is what the chart looks like.
Yeah, let's go. This is a quick overview for Bitcoin. The most important part, we saw an aggressive decline. We saw a pretty aggressive decline. And the truth is that this aggressive decline, it came sort of like tiny bit unexpected. I'm referring to this one, right? This overall big dip. And it was quite aggressive because it happened fast. We saw pretty much like, just two big movements, two big $10,000 drops, one after another, which pretty much like all together combined gave us the overall size for the dip for about, $15,000. So it was a strong dip. It was a quite quick dip, like a quick blood being, just spread on the streets. But most importantly, all the intraday indications just tell you that this dip is pretty much like over. You could also easily just see that any price action any price action below the 46,000 level wasn't really just staying there for too long, right? All those big dips, all those big just downside candles, the downside shadows of the candles, they were pretty much like filled with the demand and with buying, right? And then today we are having on the weekly open, from the weekly open, we are actually having quite a bullish reaction from this demand cluster, as I call that, right? So so Bitcoin, to me, it still requires to make at least lower high. I'm not going to tell you if it's going to break out, just straight away, which is quite likely, or it's going to consolidate and have some bit more chop, perhaps, to present us with some symmetrical triangle before the further breakout. Now, other question is that we need to see this price action supply cluster being pretty much like, just annihilated and reclaimed, right? We need to close a weekly candle at least over this area to be able to proceed higher. I do expect March, because of the seasonality effect, to be a bit more choppy. So I'm more aligning, just with the vision of the symmetrical triangle perhaps playing a big role, or just any sort of like other form of consolidation. But most importantly, I wouldn't expect necessarily, just this to repeat this sort of like a bull flag. It rarely ever happens in the markets that they offer two same patterns one after another, right? And Bitcoin actually likes also the symmetrical triangles. So I would expect something like this to occur. And it would align also as well with the seasonality effect that favors the late March through early May for the Bitcoin to soar.
Herb, do you think that when you look at 2017, 2018 versus 2020 and 2021, do you think that's a good comparison to be making? When I pull up that chart and you see the corrections that we had in 2017 and in 2018 versus 2020 and 2021, do you think that that's a good comparison to make?
Yeah, by all means. By all means, because the technical analysis suggests that the history is the best teacher. And we cannot expect, exactly per se the same price action. Of course, this would be pretty dumb to expect that. But what we can expect instead is the same similar sort of like, just market mechanisms driven by FOMO and FUD, right? Fear, uncertainty, and doubt, and the fear of missing out. Those are like the two main extreme psychological stages of the market that make the market oscillate between this range bounds, let's say, right? So we are in fact referring to the corrections like this one, right? Or like this one, or like this one. If I were to pretty much like give a pretty straight line, comparison or reference to where I expect we are in, I tell you that we are either here or here. I still think we are, just close to this final stage. The NUPL chart actually, as a matter of fact, just declined a tiny bit in the past couple of days because the net unrealized profit became realized. The big dip that happened, this 25% dip intra-week that occurred, it was actually realized profits. It was filled with realized profits. You were seeing the zone-chain spikes on the deposits. You were seeing notching spikes or realized cap. So all of that just told me, that we were seeing some casual profit taking, perhaps a tiny bit more correlated with the overall global markets, right? Because of bonds, because of the dollar strength, which actually just locally bounced. So local de-risking, but having that said, definitely being said, those two periods in Bitcoin, let's say market cycle development, I think this is the fair comparison to the current price action.
I don't know if you saw this, but even Peter Schiff's son went against him yesterday. Pump said, if you like Bitcoin at 58,000, then you'd love it at 44,000. And Peter Schiff jumped in and said, if you love it at 44,000, then you'll love it at, you'll be super dumb. You'll love it at the cherry on top at 4,000. And then Spencer Schiff came and said, okay, guys, this is our buy signal. I'm trying to get Spencer Schiff on the show. So if you are on my go and follow Spencer Schiff and tell him to come on our show, and we'll try and get Spencer Schiff on the show. Berb, can I ask you to chart?
Already following.
Can you chart Cardano for me? Because this is a rocket, man. I've never seen anything like it.
Cardano, yeah. I was actually prepared to talk about bonds and commodities.
We'll talk about that in a second. I need to.
Yeah. Let's just open up the chart.
In fact, you have 5 minutes to wait for us while you're preparing the Cardano chart. I know you're in a bit of a rush today. Do you have 5 minutes for us?
Yeah, let's go.
All right, so I'm going to get Berb off because I want to talk to you guys about the one chart that everybody in crypto should be looking at, but isn't. And this is the most important chart in crypto. And it might not be a crypto chart per se, but this chart has been going up like crazy. In fact, just in the month of Feb, this chart has done 50%. And if you look at this chart since March 2020, when the pandemic happened, this chart has gone up 4x. This is the most important chart in crypto, and it may not even be a crypto chart. You want to know what chart this is? This is the most important chart you need to be following right now. It's the chart of the 10-year US bond or US Treasury note. And if you look at this note in March, in the month of Feb, this chart went up 50%. The increase in the 10-year Treasury yield went up 50%. And this is a big telltale sign if you are in crypto. In fact, if you are in any markets. And today we're going to understand why that is. So if you want to understand why this chart is so important, you need to understand what a US 10-year Treasury is. And to understand that, you need to understand what a bond is. So a bond is effectively a way for countries to raise money when they need money. And they do this by issuing an IOU. And each one of these IOUs has an amount, a date, and a coupon. So let's say, for example, that the US wanted to do stimulus. And they wanted to raise money for the stimulus. Well, then they would go to the market, the Fed would go to the market with a bond, with an IOU offering, a treasury note. And let's say that the US wanted to raise, say, $1 million. Well, then they would offer you an IOU which says, we will give you $1 million in 10 years, and we will give you an annual coupon, in other words, an annual interest payment of 1.5%. And countries and companies use these bonds all the time to raise capital so that they can fund their growth, their operations, and in the United States' case, also fund the stimulus checks. And as they issue these bonds, they flood the market with bonds. And investors look at this opportunity to loan the government $1 million and to get it back in 10 years with a 1.5% coupon, and they say, look, we're not going to invest in this because you're doing too many of these bonds. And as the government does more and more and more of these bonds, investors get more and more scared. For one, they get scared that the government won't be able to repay its debt. Now, you may say, well, how can the US not repay its debt? It's happened many times before in history where countries who have issued these bonds haven't been able to pay their debt. You may have heard about it in Greece and Argentina, where investors who invested and lent the government this money actually didn't get their money back, or actually had to take a haircut on the amount of money they got back from these governments. So as the government spends more and more and issues more and more of these IOU notes, investors get scared. And when the governments look at issuing these $1 million notes, an investor looks at these notes and says, hold on a second. I'm not going to give you $1 million so you can give me $1 million in 10 years plus the interest payments. I'm going to only do this if you give it to me for 900. And when that happens, the yield or the return on this treasury note goes up. And that's exactly what's been happening. If you look at the return on the 10-year treasury note, the return on the 10-year treasury note has been spiking, which means that investors don't want to give the US government the debt unless the US government is willing to raise the rate at which this debt is going. Fred, let's look at the 10-year treasury note charts. So the first chart that you want to look at is the 10-year treasury note chart, and that is what it looks like since March when the pandemic started. When the pandemic started, interest rates were close to zero, and interest rates have been climbing. Just in the month of Feb, the 10-year treasury note has climbed, the yield or the return on the 10-year treasury note has climbed over 50%. Fred, call up that month of Feb chart. Let's show the guys what's happened to that note in the month of Feb. Yep, in the month of Feb alone, this treasury note has spiked, which means that investors are not willing to give the US government money unless the US government is willing to increase the rate and effectively increase interest rates. And what we can see happened here on the 25th of Feb, the bond rate spiked. In other words, investors in the US said, we are worried about the US government. We will only lend the US government money if they spike the rates. And as this happens, the US equities market continues to fall. So this is the US equities market going up as the bond rates remain low. But if we look at US equities on the 25th of Feb, when the bond rate climbed, US equities collapsed. And that is because investors are now saying, hold on a second. If the bond rate goes up, the interest rate goes up. And if the interest rate goes up, the stock market's going to collapse. And if the stock market collapses, well, then we can expect crypto to collapse. And so why do I think that this is the most important chart in crypto? Well, because if the US continues to print money and investors decide that in order to loan the US government money, they want a higher return, then we can expect the interest rates in the US to go up. And if the interest rates in the US go up, the stock market will go down as investors take money out of the stock market and loan it to the government. And when this happens, they will also take money out of the crypto markets. Now, theoretically, you should put money in Bitcoin to protect yourself against this. But unfortunately, the reality is that investors, when they take money out of risky assets and into what they call the risk-free asset, which is the US government bond, they will take money out of crypto as well. And so what we should be looking at is we should be following the US 10-year treasury note. We should see if this interest rate is going up. And if this interest rate does continue to go up, then we should expect a correction in the stock market. And if we get a correction in the stock market, well, then we could probably expect a correction in the crypto market. And that's why I wanted Burb to talk to us about what he thinks the US 10-year treasury note will do. Burb, what do you think of that thesis, first of all?
Yeah, I've been definitely not following bonds or notes, or bills, not as actively as I did, for crypto, of course. But long story short, I do expect the global governments, because the bonds market, the interest rates, this is a global thing. This is not only specific to United States. In fact, Japan is very often leading this sort of like a game. As being sort of like a test, economy for the rest of the globe. But in fact, I do expect, the Fed or the global, just governments again to keep the interest rates low, right? Because the truth is that most of the healthiest scenario for the market, although the most dramatic one, would be to have regular deflation periods. Now, regular deflation periods, which bring, just like a step back for the economies, giving the time to recover and to sort of like, just improve themselves. But most importantly, you wouldn't see that because of the overall global trend coming from Nixon's, just canceling the gold standard in 71. And ever since, we have been pretty much like seeing extreme slow but steady inflation kicking in, of course. It is said that there is a threshold of 2% yearly inflation that is being the quote unquote sustainable, just rate for the growth of economies. But with that being said, again, the overall real value of money just declines heavily. And the bonds, per the interest rates, which are negatively correlated to the prices, just like you shared, you would see those interest rates being historically low. And in fact, there is a thing that is called real negative interest rates, which after accounting, the overall inflation, it occurs that by getting into bonds, for the interests, you actually give the money back to not only to the government, but to the market. You just constantly lose money, but you will just lose tiny bit less than if you just held to cash. And so, this is quite a big scam.
It's a huge scam. But that is what governments do to raise money. So question is, do you see the bond rate actually going up? I mean, if you look at this chart, it looks to me like the bond rates, the US Treasury note rates, or the 10-year Treasury note rates are on the way up. Yes, they did calm down. And that's why if you look at the US markets today, are rallying again because investors are calm again that the bond rates may be under control. But if this bond rate continues to spike, what happens?
Yeah, so first of all, I don't really expect it to happen for too long. I do expect it more, to just sort of like be, perhaps not as high as a couple of years ago because of the overall global tendency, of the bond rates, of the just bonds or the note rates declining over the years, and because of the quantitative easing and overall easy monetary policy across the globe. But with that being said, we are looking definitely a local sort of like a pullback, right? A local upside pullback on the interest rates, and this sort of like seems to be a tiny. Well, I don't want to say healthy because this overall situation is unhealthy big time, but this might be a wise move to keep the global economies protected against the hyperinflation, right? So they are just balancing on a thin ice, if we can refer to that this way, and what they are trying to do is they are just trying to damage control, of the causes, the effects of March crash from the black swan of 2020. And that being said, you can see very clear correlation, negative correlation between the bond rates and the actual prices, right? On top of that, you are seeing, quite a bullish reaction from commodities ever since, right? And the commodities here is actually the Goldman Sachs index, but you could use the Bloomberg Commodity Index or CRB index, whatever. The truth is that commodities rally most of the time along with the yields, so you see quite a strict correlation, quite a good correlation between the bond rates and the commodity prices. And in general, I do expect commodities in the next years to really rally hard, right? But at the same time, I would expect a couple of events that could make this correlation between bonds and commodities tiny bit weaken, like global wars, for example, like it was with Iraq, decades ago. Those big events, or World Trade Center, just very, very negative days. Those big events, they tend to sort of like shake out the correlations and very often change the polarity and change the directions, which may happen again. That
we saw Joe Biden, the first thing that when he went into power, well, he bombed Syria. I mean, of all the things that he could have done, he approved the stimulus and he bombed Syria, and that's exactly what they're doing. But in the interest of time, I've got the chat going crazy here. You know what they want? They want to know about Cardano. That's all they care about. Our market, crypto obsessed. All they want to know is Cardano, Cardano, Cardano. So is Cardano going moon or not moon?
A good question. Trend is definitely strong. You could tell that by the momentum size. The momentum size is pretty much like shown here as the bandwidth. As the bandwidth, I'm referring to the size of this actual band between the bands, let's say. But most importantly, I do expect this to continue. You have seen a strong bullish trend indication actually in November last year. And ever since, we have not really seen any sort of like a bearish reaction so far, right? Which is telling you that the trend is upwards and is definitely strong. I know there are a lot of fundamental also sort of like not necessarily catalysts per se, but the fundamental strength that Cardano is showing. I would not necessarily confirm this is the strongest player that he could ever have for the next months, but it's definitely looking strong for here and right now.
Well, it was our call for the month of Feb. Listen, Burb, we're going to move on with the show. We love you, man. Keep spreading the love.
Likewise.
Guys, follow Burb on Twitter. Fred, drop Burb's Twitter in the chat. I mean, come on. That's the least we could do for our guest. Come on, Fred. He's put his Twitter link. And then I think everyone here is saying it needs a raise. I think, Fred, we need to. Fred, come on, man. Burb, thank you very much, my man. Lots of love. See you again next week, my friend. Alrighty, guys. Remember on Friday when we had the weekly banter? Remember that? Remember we had WinstonWolf. I've got WinstonWolf on again. And this time, in fact, Winston, are you there, my man?
I am, buddy. How you doing?
Winston, on Friday, you said two things. In fact, you said three things. You said, Cardano, you took a 5x leverage long. I guess you're well in the money.
More like 50, sir.
Oh, you took a 50x leverage long. To anyone who's watching this, Winston is a maniac.
Don't do that at home.
Yeah, don't try that at home. So how are you doing on that 50x leverage long? Have you cut it?
I'm still sitting there. I'm expecting a big exchange listing kind of within the week. I was a little shaky on the market pulling back, but Cardano held strong. So I would have liked to perhaps closed it at $1.40 and got back in, but it is what it is, ride or die.
Okay, now the next one that you called was Coti, and I guess you're in the money on that one as well. You called it at about 18 cents, right?
Yeah, well, I mean, I've been calling that one since 0.5%, but the latest call on that one, yeah, look, it's super strong at the moment. You can see, actually, there's a bunch of alts. Phantom, Dissenter. I mean, like, you can probably go across the board. Super strong bounces over the last 24 hours.
Before you talk alt, and I know you are watching alt, you also launched a project last week. You launched the project Public Mint, and I teased you that, would you do 100x on Public Mint, even in a bad market? What did you do on Public Mint?
I failed. It was only a 50 times out of the gate. So time to go back to the day job at McDonald's.
What we're going to do now is we got the guys from Public Mint on. Stay with us because I want to talk alts with you and I want you to get your feeling. But right now I have got George Pereira. George, welcome to Crypto Banter, man. How are you?
Hey, how's it going?
So you guys had an amazing launch last week, eh?
Yeah, it was pretty interesting. A lot of people online. Really good movement off the gate. So pretty interesting.
Well, now the real work actually starts, and I think speaking about the real work actually starting, a lot of people want to understand what Public Mint actually does.
Well, the real work actually started 2.5 years ago when we started the company. What Public Mint actually does is it's creating an alternative money system for fiat. It's a blockchain system for fiat where you can move fiat around and build applications based on fiat. And that's where, on top of that, we've built we're building Public Mint Earn. So yeah, the work for Earn has started a couple of months ago, but the work for Public Mint as a whole has started over 2.5 years ago.
Explain to me what you mean a blockchain for fiat. So I know that it is a big problem today that people don't want to transact in crypto. That's one of the biggest barriers. Tell me how you guys are fixing that.
Well, reality is that if you want to reach out to everyone, if you want people, if you want blockchain, if you want crypto to branch out and become part of everyday's lives, it's really hard to start with a new currency. Something people get out, they go to the store, they see all the prices quoted in dollars, they see dollars everywhere or euros or whatever. So it's really hard to try and replace that immediately with another currency. So what we're doing is we're replacing the way you move and the way you use the currencies you already know, right? So imagine if I always say this, if you are in Europe and at 5 p.m. a friend of yours asks you to send him 100 euros, you go to your home banking, to your bank, you try to do the transaction, and the bank will tell you, sure, we'll do it on Monday, right? So you are not moving money when you're trying to move money in your bank. You're asking your bank to do it for you. They can deny it, they can delay it, anything can happen, particularly if it's international transactions. If you take that control away and if you give people the ability to move their dollars, their euros, just like the people that have Bitcoin or Ethereum or any other cryptocurrency can, if you give them the ability to do it immediately on their own volition, right, with a private key, then that's innovative. That's different, right? People will start to use their fiat in a different way. And once they're used to it, they're much closer to being able to understand the other part of the problem, which is the decentralization of authority for issuing money, just like you were talking a few minutes ago. But they will already have sorted the aspects that are more mundane, which is actually what is a private key, how to hold it, how to move, how to execute transactions. So it's easier to start by giving people a new way to use money they already know, rather than replace the money they know with something else.
How is that different from transacting using, say, USDT or USDC or one of those stuff?
Right.
Because when I transact in USDT and USDC, I don't use my bank. I'm transacting in US dollars, which I understand. How is using your protocol or your platform different from just transacting in USDC?
Right. So people I've been in the crypto space since 2000, late 2012, and you get used to things and you don't notice small details. But I'll give you an example. If you have someone that is not in crypto, and you send them 100 USDT, and then they want to send 50 to someone else, they won't be able to. They will need to go to an exchange, find a way to buy Ether, right? They have to get registered, find a way to buy Ether. So they need to send more money in while their 100 USDT are sitting in their account. So they need to send more money in to find a way to buy Ether, to send Ether to that account, to then send USDT. So that's a huge barrier of entry, right? The stablecoins are second-class citizens on today's blockchains, or most of today's blockchains.
Which means you can't send USDT unless you can pay the gas fees in the native currency of that blockchain. So if I receive 100 USDT and I want to send them to Fred, then basically if I don't have Ether, I can't send that 100 USDT, which means I have to buy Ether, I have to spend a lot of money on gas fees, and then only can I actually send the USDT to Fred.
That's precisely the issue. That's part of the issue, but that's the main issue. Yeah.
So how do you solve this?
You solve it by. So let me take a step aside. So the business models, and none of this is the full picture, but it's a summary. The business model for a lot of stablecoins is to find sources of liquidity. You bring in those sources of liquidity, meaning people with a lot of money. You mint the tokens for that liquidity. Then you go to an exchange, sell it, even if it's a tiny fee like 0.2%. Then you get dollars back, and then you repeat the cycle. So you're literally selling your money in tokenized form. But if I have $1,000 in my bank account, the only way for me to acquire a stablecoin is to go to an intermediary, which is an exchange, and buy this stablecoin from someone else that has already tokenized it. We're solving that problem by literally tokenizing your money. That's why we call it public mint. Anyone can mint their money onto the blockchain, right? So if you go to public mint and if you have $1,000 and you have a link to your bank account, when those $1,000 are received by our custodial partners, those $1,000 are tokenized on chain. And it's a lossless process. You send in $1,000, you get in $1,000, right, on chain.
Wow.
And
Well,
that's
hold on. If I get this right, we are all becoming Tether's USDCs because we're minting our own stable coins using our own fiat. So if I have $1,000 in fiat, I go to public mint, I send the $1,000 to one of your custodial partners, and then immediately I get $1,000 in public mint coins.
Yes, exactly.
So I've minted my own stablecoin.
You've minted your own stablecoin. Yes, it's not as if we're creating different stablecoins for everyone, because the custodial aspect of public mint is sitting underneath the blockchain, right? So everyone's money is fungible, which is it's a thing that I like to point out, that we already had 180 plus currencies in the world before the crypto revolution. Now we've created thousands more. And we've created like a dozen of dollar versions. So we're actually fractioning the dollar into pools of money that are not compatible, that cannot interact. If you have USDC and USDT, you need to go through an exchange. What we're doing is we're pushing all that under the hood, and we're saying, you know what? Everything that is dollar that is worth $1 is $1. So if your $1,000 or my $1,000, once they go into the custodial partner, they're dollars. If you bring in USDC, they will sit under the hood and you'll have dollars on our chain. If you bring in money via wire transfer, via credit card, via a direct connection like ACH in the US, all of that is dollars. So you're transacting dollars. You can bring you can bring USDC and take out a wire transfer. The opposite. As long as it's on the platform, it's dollars. So they become fungible.
Okay, so now who are these custodial partners? Because I guess that would then be another point of failure, so to speak, where you have custodial partners and they're not reliable custodian partners. Who are
Yeah.
these custodial partners?
So right now, we started the project talking directly with banks, but then we had the opportunity to kind of speed up the product to market with a partner called Prime Trust, which everyone in the space knows nowadays. They are actually custodians for a number of other stablecoins, but Prime Trust is actually what they offer is the regulatory compliance for how the money is managed on custody, but essentially the money is actually kept in a network of banks. I normally say it's over 200 banks. I believe the actual size of the network right now is around almost 400 banks. So what happens is when money goes in, it doesn't sit in a single bank, because what that means is that if the bank failed, you'd be subject to to losses from the failure of that bank. So money is actually spread around a network of banks, which is not unlike the notions of decentralization. You're actually distributing money.
Okay, so I deposit $1,000 into the app. That goes into Prime Trust, which is then custodied in a network of 400 banks or whatever around the world. So there's no single point of failure. And Prime Trust manage that. And we all know Prime Trust in this industry. We all love and trust Prime Trust.
Yeah.
And then you guys issue me $1,000 worth of public mint. I guess the next question is of dollars. And those dollars are what? Are they a public mint dollar? Are they an ERC20 dollar? What kind of?
Yeah, they are both. So they are the native currency of the blockchain on public mint. So just like Ethereum is the native currency of the Ethereum network, the USD is the native currency of the public mint mainnet. And in addition, it also has an ERC20 interface. So no wrapped USD, nothing like that needed. You can either use a typical transfer or you can use the ERC version, and they're all talking about the same balances on chain.
Okay, now the public mint token, the mint token that was listed, what is that token? What does that token actually do?
Right. So there was a point about 9 months ago when we realized that we had essentially built what we set out to build as a core, as a foundation. And then we built the custodial layer, we built the blockchain layer, we started working on smart services, and now we're on to do what we call the smart services and applications layer. And one of the things that we realized is that when we offer the transferring money, that's useful, but we really realized that we were missing a way for people to create accounts that were generating interest or generating earnings, right? So we designed Public Mint Earn to leverage the DeFi, primarily DeFi, but also CeFi, as a way to offer people a way to not just store their money without the need of a bank account, but also to earn based on that money. So what Public Mint Earn does is it takes a variety of these protocols and DeFi and CeFi products and reduces risk by spreading funds around, just like Prime Trust does with the banks. We do that with various DeFi and CeFi products, and we're essentially offering people that are currently sitting on money on their bank accounts earning 0.25% APY, and we offer them the chance to use that money instead, deposit it on Public Mint Earn, and get 8%, 10% and upwards as we integrate more DeFi protocols.
So that's the earning token. That's basically what you earn. All right, now the big question before I let you go is transaction fees. Because if you want me to transact on your network, I need to make sure I'm not going to pay Ethereum type transaction fees. What are the transaction fees on your network?
Transaction fee for $1 is 5 cents. And everything is comparable to that because everything is proportional. We use gas like the Ethereum network, except that the price is fixed on the conversion between dollar and gas. It's fixed. So a smart contract so if on the Ethereum network, it costs $5 to transfer a straight transaction of Ethereum, on our network costs 5 cents. If on the Ethereum network, it costs $500, on our network, it costs 100 times less. So,
wow. Okay. So, if anybody wants to get any further details, they go to publicmint.com. I guess that's the best place to go. That is what the website looks like, right?
Yeah.
Alrighty. So we're going to let you go because we are tight on time. But George, thank you so much. This is interesting. I mean, you're solving a big problem, which is money that people understand on blockchains without all the things that have to happen in between, without having to open an exchange account, without having to buy USD and trade my ETH for USD and put in gas. You're just US dollars on the blockchain, if I understand correctly.
There's another important aspect. When you bring money into a stablecoin, it may or may not fall off the peg because there is a trading component to it. You need to go through an exchange. On our platform, it's literally one-to-one all the time. So not that it affects a lot of people, but if you're a business, you will not invite additional opportunities to lose money on your money, right?
Yes, of course. Of course, institutions aren't going to play our game if we keep charging them 1% or 0.5% every time they buy USDT. That's not going to work.
Yeah.
And so this is why this may work. All right, George, thank you so much. Thank you for coming to Crypto Banter. We'll keep
My
watching.
pleasure.
Well done on an amazing launch. Well done to Winston on an amazing launch. In fact, Winston, welcome back, my friend.
Thank you, sir.
All right, so altcoins. That one sounds like a winner. I mean, you're talking about getting US dollars onto the blockchain, letting people use blockchain US dollar money without having to go through all this rigmarole of USDT and USDC. They're actually solving a real problem.
Well, yeah, and I think it's a winner for everyone involved in crypto because the more money that can come into the ecosystem, the bigger the bubble gets and the more our bags are pumped, right? So it's good for everyone.
So like blockchain, you need to get people to adopt the product, and then we own part of the network, and so the network continues to grow. Winston, what else are you watching? People here love your calls. You've hit 5 out of 5, I think, already. What are we buying?
Yeah. Well, I mean, at the moment, man, it's kind of like, I think the lesson to take from the last little while is that like these dips don't last for too long. It's tough to call something today because, like I said before, everything's kind of bouncing 25 to 50% across the board. And I think, if you're looking for opportunities when this next happened, like these major alts that have had big moves recently, like the Cotis, like the Phantoms, those sorts of coins, buying these sorts of dips and sitting on them for a few days is almost guaranteed money.
So I called on Friday in our banter session. Remember when we went around and I said to the team, I asked everybody for one call, and I think your call was Coti. My call at the time was Vespa. It was at $20 or $21. Now it's at $33. And I'm calling it again, and I'm saying Vespa has a total value locked of more than YFI, and it's been out for a week.
Yeah, and look, I think it's criminally underrated, that one. I know you've been talking to me about it for ages, and it's one of those sort of metrics where you look at the value, you look at the market cap, it's undervalued as it is. And like no one knows about it. You're literally one of the only people I've seen talking about it. So I think, once people start to clue on, we're definitely going to see some movement there.
Yeah. I called it at $21. I'm calling it again at 32 or $33. I'm just looking where it is now. It's at $33. I'm calling it again at $33. This thing is one that you can hold it. Just hold it. Just keep it in your bags, guys. I said it on Friday. Another one which you guys are all talking here is Phantom. I'm going to get Michael back on the show. I'm going to try and get him here for you guys tomorrow, and we can talk about what Phantom's doing. Winston, would you be buying Phantom?
Look, I think it's hard to lose on Phantom at the moment. Like Phantom's, it's become a beast. It's no longer sort of what it was, and I mean, it's starting to interconnect into a lot of different ecosystems. It's starting to attack some of these challenges that we're seeing around the place with this friction and cost on networks. And I think that, obviously it's got the geniuses of Michael Chen and Andre Cronje behind it. So it's going to keep growing. I mean, these guys, like Alameda Research put money into it for a reason. And I think they put in much less than they wanted to. They weren't allowed to put in anymore. Because they see it as becoming like a relatively important part of the crypto ecosystem as well.
Andre Cronje is the CTO of Phantom. In fact, in 2017, when they launched the project, full disclosure, I was an advisor to the project on launch, and he was the CTO. He developed the project. They've been working hard in the background, and now that project is flying. The Phantom ticker is FTM. I see that people here are asking. And Sam Bankman-Fried from Alameda Research, who is Winston's favorite person in the whole world. Winston and Sam have a bromance. He bought $35 million worth of Phantom tokens. That was an announcement that was made last week. So I think the only way to settle this is tomorrow. I'm going to try and get Michael Chen on the show and let him tell us about all the amazing things that are happening at Phantom. I don't know if it's a buy or not. I think it may be. It went up to about 88 cents last week on a Binance listing and the news that Sam Bankman-Fried bought in, or Alameda Research bought in. It then pulled back to about 44 cents. And if you had strong hands or if you had guts, that was probably a great buying opportunity. It is back up at 62 cents. But, even at 62 cents, it's got a $1.5 billion market cap. So for me, that's a good call. And I also kept saying to you guys that Coti and Phantom move together. They're both DAG protocols. They're not blockchain protocols. They're actually DAG protocols, which is a different type of blockchain. It's not technically a blockchain. And so I think that those two may move together. Winston, anything else before we let you go?
Well, look, I think that there's not to be a bag shill or anything like that, but there's a lot of big developments coming for Super in the next couple of weeks. So whether it's a buy right now, it's definitely one to keep your eye on. And one of my my all-time favorites and my babies in Dissenter, they're coming up to a Q2 release of their browser. I mean, it bounces heavy every time it gets knocked back down. So these are the sort of trading opportunities where you don't have to go out and look at 1,000 coins. You can pick 10 or 15 sort of solid ones and watch the trends, wait for dips and opportunities like we've seen, and grab them as they bounce.
Before I let you go, I know that you've now become active on Twitter. You weren't active on Twitter before, and you were kind of very much a closed club. Anyone that knew you could hear what you had to say. But of late, you are on Twitter, and I just want to say, Winston's Twitter handle is @WolfCryptoGroup. If you don't follow it, guys, you're missing out, because every time Winston makes a call, the call moons. And
Thank you, sir.
Winston's
I
been a friend
appreciate
of
you
mine.
shilling me as I'm shilling, and you're shilling, and everyone's shilling. It's always fun to shill together.
Alrighty, my friend. I will chat to you soon. We're going to get Michael Chen on tomorrow for you guys. Winston, we will chat to you soon. Thank you for coming back on. And good luck with
pleasure.
the man.
Thank you, sir. Always.
Alrighty. So WinstonWolf, if you don't follow Winston, you should follow Winston. Alrighty, guys. I'll see you again tomorrow. Same time, same place. At 10 a.m. EST. I'll come back to you. I'll bring you more crypto love. All you need to do, if you're still watching, and there's still 1,600 of you guys watching, big show, smash the like, smash the subscribe, and smash the bell. And if you are subscribed, unsubscribe, resubscribe, and smash the bell, because YouTube has been blocking our videos. We will see you again tomorrow. We have a big show tomorrow, including I'm going to try and get Michael Chen from Phantom. I'll see you again tomorrow. Same time, same place. If you're trading, trade well, my friends. Be strong. Hold those hands. Don't sell the dip to people like this or people like this. I'll see you guys again tomorrow.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.